What's up everybody? Welcome to the Stocks channel. My name is Corey and today we're going to do macro technical analysis on all of the indices and we'll also look at the VIX and Bitcoin. Today we'll try to answer the question, will we see a Santa Claus rally this year? So first up, let's take a look at the S&P 500 SPX index. So let's crack open this chart and see what's going on in the stock market today. Alright, so we will be looking at a weekly chart of the SPX. So every candlestick on this chart will represent one entire week's worth of price action. And we can tell from this chart that we are in a very strong upward bull trend. And we have now had 5 weeks in a row of closing higher for the week. So we are on a very strong bull trend, but I will caution you that typically speaking, when you see such a strong bullish push to the upside, you are due for some type of pullback or consolidation cool down period. So you can go through any weekly chart and look at how many weeks in a row that you can get a green candlestick before you're due for sideways move or a downward pullback. So right now with 5 green weeks in a row and closing above the upper Bollinger Band for the week, we could easily see sideways price action or a pullback from these levels. Now don't view that as a bearish indication because we are still in a very strong bull market. So if anything, it's just a buying opportunity because we are more than likely going to see a Santa Claus rally, and we will get into why I believe that's the case. So with this week's price action, we did close above my price target up there at 46.75. So by far, you can't look at that and see anything other than bullish price action. When you see price action blasting through resistance levels in a very strong bull trend, that does mean the stock market more than likely wants to go even higher. If you're going to see a strong resistance level cause a stock market correction, you're going to see a lot of resistance at these price targets and you're going to see a lot of selling pressure, which means we won't be seeing big green candlesticks. And the only way the stock market can continue to go higher like this is because there's absolutely no sellers out there. There's all buyers with no sellers, and we are going up on low volume. So we're not even in that blow off top scenario yet. Remember, if you're getting a blow off top, you're going to see increasing volume and you're absolutely just going to go parabolic and you're going to go way too high. And then you're going to see a massive sell off to follow. We're going higher, but it's on lower volume. So we're not in that blow off top territory. So this is just very strong and healthy bullish price action. Now remember, this is strong bullish price action. So we did raise our price targets for the year. So above 46.75, we have price targets up here at 48.30 and 49.35. And we're very likely going to at least hit 48.30 before the end of the year. So there's your Santa Claus rally price target at 48.30. And above that, you're looking at 49.35. But we may not see 49.35 until Q1 of next year. So if you just clicked on this video to find out if we were going to get a Santa Claus rally, the answer is yes. And you can now exit out of the video. If you want to stick around, I'll go into a lot more details on this macro level technical analysis that should help you plan for the upcoming weeks and months ahead. So the next thing I want to take a look at is our put call ratio. And as we can tell, we have too much greed in this market. Anytime the put call ratio gets down to about 0.5, that means there's about 2 times more call options being purchased than there are put options. And that means the long trade is getting way too crowded. Looking at the chart of the put call ratio, we can see way too much greed. And the last time we saw this much greed, it did tell us that we were very close to a stock market pullback because we saw too much greed near the end of August and we did hit a peak in the very early month of September. And then that did trigger a stock market pullback and even a case of a correction in some of the indices. Previous to that, we saw way too much greed in early June and we did see a stock market low by the middle of June. So again, there was just way too much greed, and back then we had the ratio all the way down at 0.4. So yes, we could see the ratio getting way more greedy before we get that pullback, but with the price action going way too high, way too fast, I think we are due for that pullback now. When you get the put call ratio this low, it's when your Aunt Susie is calling you asking if she should buy Nvidia stock, even though she thought the chip shortage meant we were low on supply of baked potato chips. Or you have your Uncle Henry calling you asking if he should buy Tesla stock, even though he only drives lifted diesel trucks. Or maybe your friend Daniel, Danny, some people call him Dan, has been shorting this entire bull rally, and now he's finally considering going long at all-time highs. When you get these conditions and there's just way too much greed to the upside, you want to be a little more defensive. I'm not telling you to get bearish and try to short the strong bull market. I'm just telling you it would be completely normal if we saw price action going down or sideways from here. So let's jump back over to the SPX weekly chart. And we could see we had a very similar condition back in April of 2021, where we had a very strong 4-week push to the upside, and we did see the price action above the upper Bollinger Band for 2 weeks in a row. The next 2 weeks, we went absolutely nowhere, and by the 3rd week, we were at another brand new all-time high, and then the next 2 weeks following that, we did get a stock market correction. So what I'm trying to tell you is we are in a very similar boat. The next 4 to 5 weeks, which take us all the way into the beginning of December, could be absolutely nowhere where we just go sideways or possibly even pull back. That doesn't guarantee we have to see that, so don't just assume we have to pull back and try to short this market. What I'm trying to tell you is that we are getting a little overextended, and you could see a very healthy consolidation period is usually what follows an extension period. So be prepared for the possibility that the next 2 to 3 weeks we go absolutely nowhere, or possibly even see a shallow pullback, which could easily take us to our previous all-time high price at 45.35. So if we do get that healthy pullback, you're looking for something between a 2 to a 3.5% pullback. And yes, we could go a little deeper than that, but I'm not looking for a deep stock market correction, just a shallow pullback before we continue to see that Santa Claus rally that's going to help push price action into SPX levels at 4,800 or plus. So I'm bullish on the SPX, but I do think we're due for a little bit of a cool down, so look for that potential price action to go sideways or slightly down before we go for that next leg higher. We still have the very strong bull trend and everything is still positive sloping, so this is a very strong bull market that is not going to die easily. Don't worry about any rug pulls or any stock market crashes, because that's all just fear mongering. There's nothing in the chart that tells us we're just going to crash from here, so don't even consider the possibility that the stock market is just going to die out of nowhere. We'll see it coming from a mile away, and right now the stock market is just way too bullish to be planning for some type of stock market crash. If we crash from here, it would be a black swan that nobody sees coming, so don't think anybody has a crystal ball that can predict a stock market crash. It's just simply not how the stock market works, so unsubscribe from fear mongering and continue to stay objective. The objective price action and trend are extremely bullish, so you still need to be on the bull at these times. If you think we're going too high and you're getting nervous, just go to cash and wait it out. And what you're going to end up finding out is that you end up buying in at much higher prices later on. I'm not trying to tell you to FOMO into this market, because I'm also telling you to expect a cool down period, but I'm telling you that will be a buying opportunity because we are going to see the stock market continue to rally higher. And from these prices, we have at least 5% more upside until we get to that next very critical price target, very close to levels of 49.35. So stay on the bull and prepare to buy the dip, because this is a very strong bull market. Jumping over to the bear bull survey, we can see that we do have 41.5% of the people that are now bullish. So the long trade is getting a little bit more crowded. Last time the long trade got crowded, we were near 47%, but then we did see a lot of people going to cash and getting bearish after that, so the stock market did continue to rally higher. Right now, we don't have too many bears, only at 26%, but we do have a lot of people sitting in cash at 32.5%. Like I told you before, if you're sitting in cash and you continue to see the stock market rallying higher, eventually you will likely FOMO in at much higher prices, so that does mean we could see the stock market continue to rally higher. The bears would get short squeezed and the cash would come in off the sideline, FOMOing in near the top, and then we would see way too much bullish greed and way too much bullish sentiment, and that would tell us we're due for a stock market correction. So right now, the bear bull survey isn't really telling us in either direction, because with these levels, you could easily see that pullback that we're talking about, and you could also see how we could easily rally higher from here. To rally higher from here, we would need a lot of people jumping in off the sidelines, buying in at all-time highs, and nobody selling. I don't think that's the highest probability chance, so I still favor the cool down or the pullback. Jumping over to the NDX weekly chart, we can see that we also had a very bullish 5-week period where the NDX just went up in a straight line and had no looking back. The price action is well above the upper Bollinger Band, so we're definitely getting too far overextended, and that does mean that we are due for that cool down period. So we're overextended on the SPX and we're overextended on the NDX on both daily and weekly timeframes. Now remember, we could easily cool down for 1 week and this condition could go away and we could continue to rally higher. So I'm not telling you to short this market or get bearish just because we're overextended, because more than likely this condition will go away very quickly and we will continue to rally higher. So I've upgraded my price targets on the NDX and they're now at 16,544 and 17,119. We could go higher than that, but that is going to be the Santa Claus rally, and I still think the NDX is a buy the dip scenario. More than likely, we would pull back to the previous all-time high, so from this week's close to that level is about a 4.25% pullback. So again, a completely healthy and normal pullback is anywhere between 1 to 5%, and it does look like we could be due for that pullback. The other opportunity is that we just bull flag from here and we only get a very shallow pullback anywhere between 1 and 2% before we get this condition of overextension out and we continue to rally higher. Remember, this pullback or cool down period I'm talking about is 100% technical. The price action has just gone way too far, way too fast, and it's due for a cool down. I'm not bearish and I'm still very bullish. I just think the market needs to take a little bit of a chill pill before it can go any higher. You can see on the NDX, we have very bullish price action with a very strong bull trend. So there's no reason to not buy the dip until we see something shifting in the trend. You want to trade with the direction of the trend because the trend is your friend. And we are in a very, very strong bull market. Every single time frame on every single chart is in a strong bull trend, and the price action is just ripping through resistance levels, and we see no sellers in this market. Again, we don't want to get overly greedy because we see the put call ratios and we're overextended, so buy the dip and get ready for that cool down period, and then look for that Santa Claus rally to continue. On the Dow Jones, we also had that very bullish week, and we have that full bull trend, and we do see the Dow Jones breaking out of this consolidation period. When you break out of a consolidation period, there's a ton more upside potential, so look for the Dow Jones to possibly start taking the lead. We called this with the Russell 2000, and we were dead on the money because the rest is history on that strong bullish breakout in the Russell, which we'll cover next. So right now, the Dow Jones is looking very similar to the Russell 2000, basically went nowhere since May of 2021 and just started to break out in October of 2021. So when you get a long period of sideways consolidation and then you finally get that bullish breakout, you are looking for a lot more room to the upside. So the Dow Jones is breaking out of a consolidation on a weekly time frame. We have the bullish price action with 3 weeks closing above the previous all-time high, and we do have the full bull trend. So there's no reason to believe the Dow Jones isn't going to continue to run from here. So look for a lot more bullish upside in the Dow Jones, and any pullback would be a buying opportunity. Jumping over to the Russell 2000 weekly chart, we can see exactly what we predicted to happen came true, and we did get that very strong bullish impulsive rally, and that was a bullish breakout for the Russell 2000. Remember, the Russell 2000's gone absolutely nowhere going all the way back to February this year, so we basically had no price action that was bullish for the entire year in the Russell 2000, and that tells you that's a long period of consolidation. So when you get a breakout after a long period of consolidation, you're looking for a strong continuation move to the breakout, and we can clearly see the breakout was to the bull side. We have a very bullish candle closing at the high of the week and breaking out well above the upper Bollinger Band, and we have that full bull trend on the weekly chart. So look for the Russell 2000 to take the lead as we continue to rally higher, and we see that strong Santa Claus rally in the Russell. Any pullback in the Russell 2000 would be a screaming buy because this is a very strong bullish breakout and we have plenty more upside. We're more than likely going to see the Russell 2000 all the way up there in the 2600s or 2700s, and that means there's a lot more room to the upside. So if you think you missed this rally and you're too scared to buy in now, I can't stress it enough that this rally is just now starting. We talk about this kind of stuff on the Stocks Channel Discord all the time, and I even shared this on the YouTube that we were more than likely going to see the Russell 2000 breaking out. If you're into these speculations on breakouts and what the next best opportunity is, consider joining the Stocks Channel Discord community because we're absolutely crushing this market, and we do speculations like this all of the time, and we have a lot of really different experience levels and different views on the Discord channel, which really helps everybody come together and become a better trader as a whole. So right now, I'm extremely bullish on the Russell 2000, which is very obvious with this very bullish breakout to continue to see this rally going from here. If you're too scared to buy because we're going higher, you're just going to buy in at much higher prices. When you get a breakout like this after such a long consolidation, there is going to be a ton more room to the upside, so look for that very strong Santa Claus rally in the Russell 2000 to continue, even if that means we see some weakness in the NDX in favor of the small caps. Jumping over to the VIX weekly chart, we continue to see the VIX looking more and more bearish as we continue to trend down towards that $14 support level. Remember, we want to see the VIX heading lower to confirm our thesis that we're going to see that Santa Claus rally, and that's exactly what we see with the VIX in a bear market on the weekly chart. That doesn't mean we can't see some intraday volatility, so still look for the VIX to potentially spike on that pullback or cooldown period up to about 18.2 or 20. We just want to see the VIX staying below 20 to confirm that we're going back to new all-time highs. So if you see the VIX closing above 20, be a little more defensive and a little more cautious. If the VIX starts spiking above 20, we could see a deeper pullback or possibly even a correction. But right now, we just don't see that in the VIX, and the VIX is staying below 18.2. So any spike in the VIX that's below 20 should be a buying opportunity, and continue to see the VIX forming another lower high as we continue to rally higher in this bull market. Eventually, we should see the VIX getting down to 14 or possibly even closer to 12, and then we possibly could see that next stock market correction, but more than likely that's not going to be until early next year or the middle of next year. So continue to stay on the bull as long as we see everything telling us to stay on the bull. Remember that we're staying objective and we see everything in the price action and the trend across the board that it's time to remain bullish, even though we do see greed in the short term and we could be due for that pullback. Jumping over to the Bitcoin weekly chart, we can see Bitcoin is currently trading around $62,000 and we still see Bitcoin looking incredibly bullish. We're in a little bit of a bull flag consolidation look, so it does look like Bitcoin is going to decide which direction it wants to go in the very near future. Look for a breakout to the upside to bring us to our price target up there at 75,000, or a breakout to the downside means Bitcoin is more than likely going into a longer sideways consolidation. So the levels you want to watch on Bitcoin would be a break below about 56,000 to go into that deeper sideways consolidation, or a breakout above about 64,000 to tell us that we're going to that new all-time high at 75,000. We still have the bullish price action above all the moving averages and the very strong bull trend, and we are consolidating on relatively average volume, so look for a big sharp volume spike either on the breakout to the upside or the breakdown to the downside to tell us where Bitcoin's going from here. But with the bullish price action and the bullish trend, there's no reason to believe that Bitcoin is not going to blast through the previous all-time high and get to that price target at 75,000. If we continue to rally higher from there, your next price target will be at 86,500, and I do think Bitcoin could go higher than that, but let's go ahead and draw the line in the sand at that level, and let's make the price action prove it to us before we get overly bullish. A lot of people have some ridiculous price targets on Bitcoin, and I'm not even going to go there. We'll cross that bridge if and when the time comes, but right now I do think Bitcoin should have no trouble getting to at least 75,000. So look for this potential bull flag to see a breakout to the bull side in the very near future. Otherwise, we're going to a much longer, deeper sideways consolidation, and we're just going to eat time off the clock before we see that bullish breakout. Remember, with the price action and the trend, I favor the bullish impulsive rally to that next price target. So jumping back over to the SPX, we definitely have very strong bullish price action with a very strong bull trend, so there's no reason to get too overly scared about this bull market. We're more than likely going to see price targets nobody in their wildest dreams dreamed about the SPX hitting, but that's what the price action and the trend are telling us to do. And if we're staying objective, we have to check our bias or our fears at the door and follow the price action. So as crazy as it sounds, it looks like we're going to see the SPX hitting 48 and 4,900 in the very near future, which means every pullback or sideways consolidation from this level will be a buying opportunity for the Santa Claus rally. That's where the price action and trend tell us the SPX wants to go, so we're just going to stay on the bull and follow the trend. If we see something shifting in our day-to-day analysis, obviously I'll update my analysis, but this is what we currently see on all time frames, and we can definitely see the stock market wants to go higher at this time. Remember, if you're getting nervous, go to cash because shorting this bull market is a terrible idea. If you're trying to call every top and you're trying to profit off of every short trade, you can see how difficult that's going to be with 5 weeks in a row going higher in the SPX. All odds are in the favor of the long trade, so why would you bother trying to short this market when it goes up way more than it goes down? If you're going to gamble, you're much better off gambling with the direction of the higher probability, so why not just make the long trade, and then if you see the pullback, adjust accordingly. Stay on the bull and stay objective, and right now, we still have to be incredibly bullish because the stock market is still incredibly bullish. Also, don't forget that I do have my own trade alert service called BANC Trade Alerts that only trades the TQQQs, and I do have a 50% off promotion code for your first month. I also have the Stocks Channel Discord where I do intraday updates and analysis, and I bring new trade ideas to you weekly, and we are absolutely crushing this market. If you're interested in trying out BANC Trade Alerts or joining the Discord trading community, you can find out how to join by clicking on the links in the description of the video. So thanks for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.